Costco beating earnings estimates for its fiscal first quarter after increasing its membership fees. E-commerce, also a big driver for the retailer this quarter, was up 13% from just a year ago. Corey Tarlowe, he is Jefferies' Senior Vice President of Equity Research, joining us now on this. And Corey, when you take a look at the stock's reaction versus what we're hearing from Costco, a little bit of an inconsistency. I'm curious how what your read is on these results and maybe how that sets up Costco in this new year.
Yeah, good morning, and thank you for having me. I think the results speak for themselves. 40 years of really consistent results, and this quarter was just yet another proof point of two really key metrics that I think are key to highlight here. One is market share, and the other is margins. On market share, their comps were up 5% roughly worldwide and in the US. Most other retailers are not posting 5% comps, and almost all of that is driven by traffic. So membership is really at the core of what they're doing here, and it's all driven by traffic. And this is helping to really improve unit economics and overall flow through to the bottom line, which brings me to my second point on margins. The first quarter was the highest operating margin that Costco posted in roughly 2 decades. So what you're seeing is a flywheel of a business that's driven by membership, but then given the strength in the membership trends, they now have the ability to invest in price and wages while still driving flow through to the bottom line and rewarding shareholders.
Corey, from your assessment, what's the stickiness factor among some of their wealthiest consumers, the more affluent consumers that are signing up for Costco memberships, trying to get gold bars and maybe purchasing some Kirkland irons?
Sure. Well, they've seen very good results from gold and jewelry, up double digits in the quarter. And their general merchandise business was actually up high single digits. Most other retailers are seeing lackluster results for general merchandise. They're actually negative. There's one other retailer that's been positive in the last quarter at mass, and that's Walmart. And it was up low single digits for the first time in 11 quarters of being down. So you're seeing really, really strong results from Costco in a general merchandise category, which I think speaks to their ability to curate amazing items. And it's a credit to Costco's merchants that really resonate with their customer that is a bit higher income. And a lot of these members, they have 77 million members now as of the last quarter, are actually executive members who over the next year, given Costco's raising their membership fee, are going to be paying not $120, but $130 because they raised the membership fee recently.
Are they going to be able to continue to expand their footprint, do you think, just given the macroeconomic environment right now?
They're opening clubs at the fastest rate on a nominal basis than they've ever done. Costco's opening, call it 25 to 30 units a year, and most of those are actually indexing to the US. And historically, if you go back, they had always said that they wanted to open more internationally, but there's just so much fill-in opportunity in existing markets in the US that they're going to continue to open more units in the US than they are internationally. Now, the goal is to ultimately index 50-50, but right now it's much more US. And I'll give you one example. They just recently opened a new unit in Pleasanton, California. They did this the day before Thanksgiving. The unit opened the first day at $2.9 million. That's the highest single day of sales for a new unit ever in Costco's history.
Corey, is Costco the best wholesale buy in the market right now, or is there another right now that's out there in your mind?
Look, I mean, I think Costco's within the club retail channel, without a doubt, the best performing stock. And it's likely to continue its momentum as we look ahead. Every single metric up and down the P&L speaks to a positive bias. You have upside from membership fee, you have upside from comp and traffic, and then again, the continued flywheel given the investments in price and wages, yet still expanding profitability. So we do really like Costco. Pushback from bears has been valuations a bit rich. However, if you tie those valuations to fundamentals, what we've looked at is that the EBIT per square foot or operating profit per square foot actually ties directly to fundamentals and continues to point up and to the right. So there actually is further upside, not only to numbers here, but also valuation.
Corey, real quick before we let you go, there was one thing that you pointed out in your note that you didn't really like from this quarter, and that was the fact that renewal rates here for membership did slightly dip here during the quarter. Why isn't that a bigger concern to you?
So this is driven by more members that joined online. And there is a bit of a caveat. So the renewal rate was about 90.5% last fiscal year. It dipped 10 basis points, very modest, to 90.4. It was driven by more online signups. Those online signups tend to have a little bit lower retention rate. However, the core of the business, which accounts for most of their members, is very, very healthy. So no real underlying concern here, but it is something to be aware of. And Costco had pointed out that this may be a headwind to renewal rates for this fiscal year.
All right, Corey, we got to leave it there. I got to go pick up some pesto butter salmon real quick. I'll be back. Thanks so much for taking the time here.
Thank you.